Hey folks, welcome to Macro Crazy, where we help you on your macro trading journey. There is a lot going on and a lot to cover, so I'll try to move quickly through it. Hopefully, it helps you. Okay, so starting from the top, let's talk about Treasury buybacks. Treasury said that this week that they're still looking into possible buybacks. I have to wonder where's that money coming from, given that we're $31 trillion in debt and we're running huge deficits. But they're looking into it. So normally, if that was the only thing or only significant news, that would be bullish for yields, and I would look into adding, yield-sensitive stocks. But with so much other things going on, I wouldn't do that right now. But it is something worth keeping on the radar just in case. Okay, let's talk about oil and Iran. There's on Zero Hedge there was a note about oil being higher because Pentagon is warning of an attack by Iran on Saudi Arabia within the next 48 hours. I mean, just to my ear, that sounds incredibly unlikely, but again, should keep it on your radar. Obviously, with higher oil prices, you're talking about airlines getting hurt. You're talking about chemical companies like petrochemical companies. Oil is an input. They would also get hurt. So that's kind of what I would look at. Moving on. Okay, there was some optimism around a possible moving away from China's zero COVID policy and that their economy might be reopening. And that got crushed, so you can forget it for the foreseeable future. Anybody who's heavily dependent on China for sales, that's obviously a concern and might be worth looking at. So, moving on to the next item, North Korean missile launches. Okay, so the crazy man in North Korea has launched a bunch more missiles. You might say, who cares? Isn't that just normal? Yeah, he seemed to ramp it up, and the companies that benefit tend to be in the U.S. defense industry, like anti-missile equipment that can be sold. And so I think like Raytheon builds equipment like that, so that could be a company to look at. You can always look at Boeing or any of the other defense industry companies. All right, finally, bird flu, it looks like, is back at least in part and a little bit. It's in the US, UK, so birds are getting slaughtered. That's bad for poultry producers. Like oil, it's kind of inflationary. So let's see that if that gets worse, but something to keep on the radar. And I've mentioned tiers, so you could look at the suppliers for these poultry companies. I mean, you could look at the suppliers for any of the items I've mentioned and try to have an indirect play versus a direct play. Like, for example, selling airlines directly, you could try and find a key supplier to the airlines and buy or sell depending on how you want to play it. Okay, the elephant in the room. I didn't mention the FOMC meeting yet, but that happened, 75 basis points as expected. There was some language in the press release about, looking ahead more to the releases and how the economy is handling interest rate hikes so far. The market initially rallied on that, but then afterwards, at the press conference held by Powell, he kind of squelched that and was more downbeat and said rates would be higher and would stay higher for longer, and the market turned back down. Okay, I'm going to quickly go over the early week numbers, although the really story was FOMC meeting that was coming up. PMI was worse than expected. Manufacturing numbers were a little bit better than expected. And the jobs numbers were definitely better than expected, so still a strong job market. And but they weren't market movers to a very large extent. And of course, Wednesday was the FOMC meeting. As you can see from the calendar, on Wednesday, other than FOMC, nothing really that was going to be market moving. The story was the FOMC and the press conference afterwards. Okay, looking ahead to Thursday, we've got jobless claims, volatile number. It's weekly, so probably not a huge market mover. Foreign trade, not a big number. The market pays a lot of attention to. Productivity might be interesting. It's an indication of whether higher productivity could help to bring inflation under control. We'll have to see. PMI, it's just a final number. Earlier numbers have already been released. ISM might be interesting to pay attention to. Okay, last but not least, let's look at Friday. Non-farm payrolls, that's typically a big number. The earlier in the week, jobs numbers were good. So that could be an indication that we could get a higher number. Again, that could send yields higher and push the pivot idea even further back. Average hourly earnings. Sorry, guys. Participation rate will be part of that, and there's a Fed speaker. So it'll be a busy week still. A couple of days left. One last item I wanted to bring up, to be not to bury the lead, but I do want to talk about Dr. Doom next, so I hope you stuck with me so far. Okay, Nouriel Roubini is back, aka Dr. Doom, and he's doing interviews promoting his new book, Mega Threats. I might have to go get that. And he's saying a lot of stuff. He said basically what's happening now is another financial crisis. It's basically part 2 of the 2008 Great Financial Crisis, that it's delusional to think we'll head into any kind of a mild recession. We're headed into definitely a severe recession. It's basically a stagflationary debt crisis. Everybody, households, corporations, the government is buried in debt. And as interest rates are going higher, there's no easy way out of this. And the other thing he's saying is that this is the end of the globalized kind of ecosystem, the globalized world. And that could also mean potentially war. If we're lucky, we'll only get a really bad case of the 1970s, or we could get the 1940s. So on that note, I hope you have a good rest of the week, and I'll post something on Saturday.